S&P makes a higher high here, which is really what we were looking for. We had massive follow through after a wild day yesterday, but I think it's important to just start with the basics. What we're going to start with is just this initial jobs and the 830 bar. Then we're going to talk about what's happening after hours, why Google's up about $8-9 here, and what to look forward to tomorrow. Also, what happened with CEP today, the dollar, the bond, a lot to do. Durable goods comes out. Durable goods, as we all know, is, are we buying a washer dryer? Are we buying a dishwasher? Huge spike in durable goods. And the question is why? Well, that's a simple one. There's a reason for that. And the reason is simple. We're seeing massive front loading of spending because of tariffs. Therefore, it is not unrealistic to see durable goods go higher during such times. What is interesting is initial jobless claims at 222, at consensus in 216. This is the pickle. This is what is throwing everybody off right now because they're not understanding how in the world this is happening. If things are supposed to be so bad and we're going to go into a recession, why aren't the claims going up? Why are the continuing claims going down? Existing home sales were roughly in line, and that is still a weak number, but jobs is what we are focused on. Now, we're going to get more data tomorrow as well. And that'll tell us how the consumer is feeling, and we care about their feelings. But we're going to talk about that in a sec. So let's dive into this daily chart, and I think this is super important. What we have is a change in trend. At this point, it's irrefutable. Can we say that it's confirmed? No. Are you getting leadership? Yes. Is the breadth getting better? Yes. We went through parts of this. You're going to want to make sure you subscribe to the channel and click all notifications because tomorrow, while Saturday's video is packed, going over dumb money, smart money, going over the rotation that we're seeing, it's too much to do in a Thursday video, but there is this that we've been hammering home for some time now, and this is more important than any moving average or anything that you're seeing. The change in trend is the fact that you're making lower lows, and now it has finally flipped to a higher low. It does not mean that we have a higher high yet, but we're getting there, and it's all along that same level. This is exactly what you want to see. This is very different than us waiting for the 5 to flip and come back down and retest and break, but telling ourselves that it's okay because this time it's special. What you're seeing here is actual structural development. And that's why I keep pushing this over and over to you guys. This is the stuff that makes the difference when you're going through corrections and pullback. Understanding this stuff is all the difference. Sitting there and waiting for some magical lagging indicator when you're going trendless is pointless. Moving averages are great in a trending market. If the market's not trending, they're useless. What is more important are momentum indicators and oscillators. They do tell you. And pain points. VWAPs are pain points. Look at all that pain. You can just see all the pain on everyone's faces. Their hopes and dreams smashed in their basement eating Hot Pockets. Now we've got that higher high. We flipped. We're over. We gapped over. And look at this close. Do you know what today is? I'm glad you asked. It's the first day that the ES has closed over that April 9th. First day it closed over. That's really important for us. So do we care that when we look at this, that we're above the 22 for the first time? Since we cracked back here with his special sheet that he brought to all of us for Liberation Day. Do we care about the fact? Yes, of course we care that we're above the 22 and the 12's pointing up. Remember, I use a 12, a 22, and a 55. You should use what you're comfortable with. The important thing that you should take from this, more than anything, is this is the first time that we have a 12 pointing up at that trajectory. Even though it pointed up like this, we've never had that angle. The angle's everything. We want this 22 to point up, but you're going to get a 12-22 cross first, and you realize that you could be up another 200 points before you even get to the 55. For those that do not remember, we're going to get rid of the vol in a sec here. People are going to say, do you care about the volume? Only on a relative basis. The absolute volume, no, because sellers are exhausted. They're so worn out. It's exhausting for them at this point. Literally, they're exhausted. So if you see here, I use a 12, a 22, and a 55. Real quick recap for those that don't know and know that all these videos are linked, which is why I always say, if you like the content, subscribe, click all notifications because it comes at a different time. But we always want to focus. The 12 tells us, should we even bother doing swing trades or not? Below, no. Above, yes. They're just simple demarcations line. The 22 is telling us who's in charge. Bulls in charge, bears in charge. Below 22, bears in charge. Above 22, bulls in charge. Do we have institutional support in the market? The 55 tells me that. Have we had institutional support since the 21st? If you're in the community, you will note this date because this is the day when we got out of those tech swings, and you can go back to the other videos and see they're linked. I don't delete anything on these videos, guys, right or wrong. I keep everything, so it's like a big timestamp. You can go back and rewatch them during those periods of time and say, hey, what did we think about what was going to happen here? And that's how we learn, right, from our past mistakes. So what we want to do is just watch how we act in this level and then kind of go from there. All right, cool. What does this mean for me? You need to find the names that are now above the 22 and that have a better looking chart than this. And I start index sector stock. Index sector stock. We're going to get there in a second, and I'll show you what I'm looking at. But there's a lot to cover, short time to do it. So I prepped it all so we can pack it in today. If you do find this helpful, please share this video. There's a lot in here. What I want to do is I'm going to break this down to the weekly. And I just want you guys to think about this. If you bought during the Great Financial Crisis, or you bought during the 2018 period, or you bought during the pandemic, or you bought in August 5th, 2024, or you bought, well, I don't know, now, and you looked out 3 to 6 months, how did you do? Were you happy with your purchases? I would suggest that in every situation except for this one that you're going to say yes. The reason you're not going to feel that way this one is because of fear and because you're in this one. And so you can't think about it objectively. The good news is you don't have to think about it objectively. Once you break 30, we're going to get into this in Saturday's video. Once you break 30, it's on like Donkey Kong. All the cool kids say that in case you're wondering. When you break that 30, all those CTAs out there, they have to lean one way. That way becomes they have to start looking at equities and buying equities. So all those technicals start kicking in, the ones that were tearing us apart. Now we start getting that push. Okay, we want the push behind us. In other words, if you think about you're in the ocean, you're up over 30, and you have a weight on your chest. You're in the ocean and you've got a beach ball underneath of you from everything from 30 down to about 15. If you think about that demarcation, that line, and that's a great way for me to explain it with an actual demarcation line, this is why all of a sudden selling puts are going to work better than buying calls because the IV is being sucked out of the market. This is why you're trading options today and you're trying to figure out, I don't understand why they're not working as well, right? They're doing that slow grind 45 degree up, which is just institutional buying, which we've gone over before. As long as you close under 30, we're groovy. That's what you want to watch tomorrow and go from there. Could something happen with the data that we're expecting tomorrow? 100%. Could mean tweets start again. They're going to have to be super, super mean. Remember what's going on this weekend. We have the funeral of the Pope. We have the president going over there and having several meetings. It's going to be like headline central. It's going to be the best headlines of all time. So NQ, we have the rally, we have the pullback. What do we have here? I'm glad you asked. We take a look. We have the break, the lift, and then you go. The break, the push, and then you go. Are we over? I'm glad you asked. This closed above April 9th. This is exactly what you're looking for. This is exactly what you're looking to see. And I can't stress this stuff enough. This is where you need to be focused. This is the stuff that you have to focus on. So if we come to something like this and we're watching this rally, pullback, rally over, it's exactly what you want. Now, you're going to get a lot of people who are going to say, well, we don't know this in tariffs and blah, blah, blah. We didn't know anything before. And that's my point. Everybody's a tariff expert now. They switched from geopolitical expert on the Ukraine and Russian war and regional banks in 23, and now they're all tariff experts. You don't know anything. And I don't mean you, I mean me. We don't know anything. We're not invited to the meetings. We're not at the cool kids table. We have to use the tools that we have. Remember, they're the sharks, we're the remora. When we see stuff like this, we popped over. Someone looking at this chart right now as one of the legs of the stool, which obviously I have a huge fascination with this stool, and understanding that the macro picture is getting better no matter how you say it, it is. How can I say that? Because you're getting less uncertainty. And as you get less uncertainty, the macro picture gets better. If the macro picture was not getting better despite what you think, it doesn't matter what you think, it matters what's happening. The VIX would not be going down. It's that simple. They wouldn't be selling their insurance on bonds, which is what they're doing. So we understand the macro picture is getting better, which means, or more certain, let's leave it at that, because nothing's really fixed, but it's getting more certain. We know where the high end is, at least. We have that going for us. Then we have the fundamental side of this, which is getting very strong if we start looking at earnings. 18% of the companies last week that were XLF, 71% of those beat or exceeded estimates in the financial front. So how is it not getting better? It is. Google had a good quarter. ASML had a good quarter. Texas Instruments crushed. How are fundamentals bad? Who's missing? This company or that little company, but overall, they're pretty good. And the technicals are shaping up. These are facts. These are objective facts. Now, can you say we've gotten a little high? Yeah, maybe you could make that argument with this DTL here. You could give me the vol argument, but that's going to fall on deaf ears with me because it doesn't matter to me because sellers are exhausted. So all you have are net buyers. That's why the up volume, total volume is where it is. I'm going to go off on a tangent that I didn't have scripted, but here we go. Hold on, we'll come right back to your regularly scheduled program. But I think this is important. Now that I stepped in it, might as well go for it, right? In for a penny, in for a pound. So what do we start having here with up volume divided by total volume? You can get these for yourself. U vol divided by T vol. Now look, you can know how to do something. So if you look at these levels here, right, here's a 99 reading on the 9th. 99 up volume versus total volume. Do you think you put a bottom in? The market thinks so. How about yesterday? What'd you have? Tuesday, 90. These kinds of up volumes, if you go and mark these and you want something fun to do tonight, this is what I do with my life. Take these 90% and go mark them on the S&P and go take a look, or actually go and mark them on the New York Stock Exchange and you'll see exactly what I'm talking about. This kind of up volume, I'm more interested in this than I am in the total volume number because there's nobody left. What I do find fascinating is when we look at the SPY divided by the Q, what we're seeing is what? Absolute consolidation. One could actually argue that you're seeing a, head and shoulders, an inverse. Maybe. But it's starting to roll over again, isn't it? And I thought this is so fascinating to me. Like, watch where this is starting to roll again. Hold on. I just thought this was just so neat. So here's that level from back in like August 20th, where SPY versus the Q, right? Relative performance. You can see what happened in 22 where SPY kicked its butt. And you can inverse this, but this is showing if SPY was to outperform, what does it look like? Well, SPY in between July and these areas, it's been outperforming from April on. Well, what's starting to happen? We ran right into resistance. What's it doing? It's starting to roll over. Left shoulder, head, right shoulder. You can see it there with me. Okay, right there. So when we start to see that stuff, we want to pay attention to it. It's super, super important. And that means that the next leading sector is probably going to come through what? It's probably going to come out of the tech sector. It already has. We're going to get into it this weekend. If I have time, I'll get into it today, but I don't think we're going to have the time because of all the stuff I want to cover. So then you have the bond market. Bond market sitting at 430. You rallied up. And now you're buying down, and now we want to watch this. What you need to know for tomorrow about this. At 10 o'clock tomorrow, you're going to want to watch Michigan consumer sentiment and see what happens at 10 a.m. Inflation expectations at 10 a.m. Remember these crazy numbers that are out there where Michigan inflation expectations are 6.7, even though you have a negative CPI. If any of this stuff comes down or any of these expectations go up, you're going to see the market rip. If this gets worse, it could weigh on the market. But overall, I would expect people going into Friday not really wanting to be short with all these meetings. But you never know what people are thinking, and we're going to get to that. Is there some froth in some of these moves? Absolutely. And you can take advantage of that. One of them was this CEP. The guys were trading this thing at like $12 in the room, whacking it around. I didn't get involved, quite frankly, till a little bit last night at like 17, and I was in and out for a buck. But I got involved today. I really didn't want to hold this thing overnight because, quite frankly, when you look at it, they really don't have any stake in the company. They're just the facilitator. And I don't think a lot of people actually get this yet. You might want to start doing some due diligence on this one because it's really Tether that owns this thing and controls all the voting rights and is actually selling their Bitcoin to it for a premium. If I have time, I'll get into it in the Saturday video. But it doesn't matter because they have a guy that's a CEO that's going to run it and he has a hoodie. So everything will be fine. But if you take a look at how this is acting today, it just presented us huge opportunities in trading. And it was a really great example of a liquidity grab. And you can see that right here at 10 a.m. on that news when the new home sales came. And the first trade stopped me out where I was basically break even. And then I saw the flip and I saw the rebuild. Actually, you know what? It's a great example. Watch this live for a second. It's going to go again. And what you do now is measure the move predicated upon fibs on the day. So like here, this would be your next target, 27.27. You have a 3-bar pattern and everything. That's actually setting up for you to push again. And you have huge volume. What you'd have to do is just use this low as your stop right there. 3 to 1 there. It's probably worth it. Probably scalp right there. Trimmed. I'm just scalping it. That was nice. Trimmed. Down the half. Trimmed. We got there, right? Did we take it? Yeah, just leave it. I got the partial. So there's my target. I hit my target. If I didn't trim here, I would have trimmed right into it. But I trimmed into that. So I'm going to hold it here because that's my target. See what happens now. Next would be that 32 level. Now I'm up 5 on a scalp of all things. Trimmed. Is it time to go? All you're going to do is stop me out and then rip. Watch 27. 27 is my stop on the rest. That's my target on the rest. 32, 37. Come on. You can do it, little guy. Huge vol spike. Halted. The position size is the same. And then they're going to halt it again. Not today. Trimmed. 37 3/4. Trimmed. And I'm up $10. Flip it. Yay. Target hit. 37. They're going to halt it in a minute here. You're getting imbalances. Crazy how these fib levels work, isn't it? It's like nuts. See how they get wide and then they get tired. So the next one's 40 3/4. 40, 61. 38. And they halted me again. So that's my second halt. Let's see what this one does. But it's going to be like this all day. So is there froth? Of course there is. And does that usually happen during these periods of times? It does until it doesn't, and then the money comes out. And I know that's like double speak, but what we'll start seeing is that rotation. Remember, the market went up today, and the dollar did not go up. The dollar hit parity and kind of kiboshed itself here, and that's not great. I'd like to get back over this level. That would make me feel better about myself. And it's just not there yet, so we have to watch that. If you are on the wait list, make sure that you look for a letter. It'll say that there's 12 hours left. If you're not on the wait list, the next cycle is going to kick out, and that looks like it'll be a little bit. But make sure you're on the wait list if you are interested in getting in the community. All right, so we have the S&P here, and what's different about this? Why am I showing you this when we just went over this? Very simple. Here we have the S&P, and we're looking at the 200-day. And we're starting to see a higher high, which is good. But really what you're seeing are breakouts. And you're going to say, well, what are you talking about, Willis? I'm going to say, I'm glad you asked. And what we're going to do is blow this up, and I'm going to show you. See this lift right here on the 50? Right here? Okay. And then you come right to that level, right there. See where you were here? See where you are now? See the relation to how many names here were over the 50 versus how many names here are over the 50? See how this is broken out of the 50? See how this has not broken out of the 50? So what we have here is we have what is called a positive divergence. You now are in the same exact spot you were before, but during that period of time, what do you have? You have more names above the 50, waiting for you guys to say something, and of course, you're not going to be able to. Then we go to the 20. And then I'm going to say the same thing to you, and it's going to become absolutely glaringly obvious. And you can see the pop right over here, the pullback, and then you can see the lift right through it. And now we're up, up, and away. This is exactly what you want to see. I'll show you exactly how to use this and how it ties into dumb money on Saturday. We're not going to have the time. And then what's cool about today is Thursday, the 5s stayed where they are. So what's really cool about today, see where the 5s are where they are? I know I'm getting all excited, giddy like a kid at Christmas. The 20's up though. So what is that telling you? Rotation, rotation, rotation. That's a sign of a healthy market. They're rotating. That's why when people were asking me today and they were saying things along the lines of, why isn't MSTR participating? It's not their time to shine. What's going to start shining are the names that we're setting up that were beautiful, like Crowd. Look at Crowd. Look how beautiful that chart is. Look at that breakout. It's been trying for months to do this, to break out. And today was its special day. And you can see how it broke out and how amazing it looks. It wasn't huge volume. Doesn't have to be. Why? Because the majority of the volume was what? Up volume. See how that one chart back here, up volume to T volume, ties into everything when you're starting to look at your names, right? It all kind of coincides together, okay? All right, cool. So you have names like Crowd that are breaking out, PLTR, breaking out. By the way, the names I'm going through, I may or may not have a stake in. I do have a stake in the names that we're going through right now. This, to me, looks like it's just about to rip everyone's face off for whatever it's worth. But more importantly, how about those earnings? How are those earnings going? So we have Google tonight, and Google's trading up. Now, cloud was weak, but search was good. And search and ad was really good. So, this is really what you're seeing. You're seeing that rally up into the conference call, and then this is where the CEO explains everything, and then this is where the CFO explains how they're going to pay for it. That's always the best part of the call. The CEO comes out with the vision and then points at the CFO and goes, okay, now ruin everyone's night. That's what's happening right now, probably. What's important about this is how it transpired out. So then Meta, look what Meta's doing. Why? Search and ad revenue is up. That's why Meta's doing this. That's why Reddit's up. See, when you understand, I'm going to say it, when you understand the stool and you understand the technicals, fundamentals, and macros, what people are doing is they're not understanding why these are going up. But if you understood the fundamental breakdown of Google, you would understand that it's more important for Meta search and Reddit and names along that for earnings than it is for them. You probably even see something like Snap moving or Pins moving on such news. Okay? That's what you want to focus on. Your goal is always to take the information and figure out how to benefit the most from it. Intel's being Intel. It's trying to trade up on what was just another abysmal quarter. But earnings overall yesterday, Texas Instruments, fairly good quarter. Hung in there, did exceptionally well. Now, you had the 900 level, couldn't get over it, wound up getting over it. Look at that. It's beautiful. You have a lot of things turning here, guys. I'm going to get into it on Saturday, but I'm just going to leave you with this because I know it's Sue's favorite stock. And it's her birthday. Everyone say happy birthday to Sue. So here you are, and you're back above that 50, and that is it. Have a good night.